Welcome to our channel. In today's video, we're diving deep into the world of ETFs to answer a crucial question for investors: which performs better when interest rates are on the rise, S&P Homebuilders ETF, XHB, or iShares US Home Construction ETF, ITB? We'll explore the key differences between these two popular ETFs, examine their sector weightings, and analyze their historical performance during rising interest rate environments. Whether you're looking to optimize your investment strategy or just curious about how these funds react to changing economic conditions, you're in the right place. So, stay tuned as we break down the facts and help you make an informed decision. How do the underlying indices of XHB and ITB differ in terms of their composition and methodology? The S&P Homebuilders ETF, XHB, and the iShares US Home Construction ETF, ITB, are both exchange-traded funds that provide exposure to the homebuilding sector, but they track different indices and, as a result, have distinct differences in their composition and methodology. The XHB ETF tracks the S&P Homebuilders Select Industry Index. This index is an equal-weighted index, meaning that each stock in the index is given approximately the same weight regardless of the company's size. This results in a diversified exposure where smaller companies can have an influence similar to that of larger companies. The S&P Homebuilders Select Industry Index includes not just homebuilders, but also related companies that provide services or products tied to the housing market. This can include companies involved in home improvement, building materials, furnishings, and even home retail. Because of this broader approach, XHB has a more diversified set of holdings across the housing industry, including companies that are not directly engaged in the construction of homes but still play a significant role in the overall housing ecosystem. On the other hand, the ITB ETF tracks the Dow Jones US Select Home Construction Index. This index is market cap weighted, which means that companies with larger market capitalizations have a more significant impact on the index's performance. The focus of the Dow Jones US Select Home Construction Index is narrower compared to XHB's index, concentrating more directly on homebuilders and companies whose primary business is home construction. As a result, ITB tends to have higher exposure to larger, well-established homebuilders. The index may include some companies that provide building materials or home improvement services, but the emphasis is squarely on those companies whose main business is home construction. In summary, the key differences between the underlying indices of XHB and ITB lie in their weighting methodologies and the scope of their focus. XHB's underlying index is equal-weighted and has a broader focus, including a wide range of companies associated with the housing market. ITB's underlying index is market cap weighted and has a more concentrated focus on the home construction sector, particularly on larger homebuilders. These differences in methodology and composition lead to different risk profiles and performance characteristics for the two ETFs. Which ETF, XHB or ITB, has historically provided better exposure to home improvement companies in addition to homebuilders? Between the S&P Homebuilders ETF, XHB, and the iShares US Home Construction ETF, ITB, XHB has historically provided better exposure to home improvement companies in addition to homebuilders. This is primarily due to the differences in the underlying indices that these ETFs track and their respective methodologies. XHB tracks the S&P Homebuilders Select Industry Index, which is designed to provide a broad representation of the homebuilding industry. This index is an equal-weighted index, meaning that all the companies within the index are given approximately equal importance, regardless of their market capitalization. Importantly, this index includes not just companies that are directly involved in home construction, but also those that are related to the broader housing market. This includes home improvement companies, building materials suppliers, and companies that provide furnishings and home-related retail services. As a result, XHB's portfolio includes a significant portion of companies whose primary business is not the construction of new homes but rather the improvement, renovation, and furnishing of existing homes. This diversified approach allows XHB to capture a wider range of companies within the housing ecosystem, providing investors with exposure to both homebuilders and home improvement companies. On the other hand, ITB tracks the Dow Jones U.S. Select Home Construction Index, which is more narrowly focused on companies whose primary business is home construction. This index is market cap weighted, meaning that larger companies have a greater influence on the index's performance. The Dow Jones U.S. Select Home Construction Index primarily includes homebuilders and companies that are directly engaged in the construction of residential properties. While it may include a few companies that are involved in related industries, its focus is on companies that derive the majority of their revenue from home construction. Consequently, ITB tends to have less exposure to home improvement companies compared to XHB. In summary, XHB has historically provided better exposure to home improvement companies in addition to homebuilders due to the broader and more diversified nature of its underlying index, which includes a significant number of companies involved in the home improvement sector. This makes XHB a more comprehensive option for investors looking to gain exposure to the overall housing market, including both home construction and home improvement businesses. How do the top 10 holdings of XHB compare to those of ITB in terms of concentration and sector allocation? The top 10 holdings of the SPDR S&P Homebuilders ETF, XHB, and the iShares U.S. Home Construction ETF, ITB, differ significantly in terms of concentration and sector allocation due to the distinct methodologies of their underlying indices. XHB tracks the S&P Homebuilders Select Industry Index, which is an equal-weighted index. As a result, XHB's holdings are more evenly distributed across its constituent companies. This means that each stock, including those in the top 10, generally holds a similar percentage of the overall portfolio. The equal weighting strategy reduces concentration risk, as no single company or a small group of companies dominates the ETF's performance. In XHB, the top 10 holdings typically represent a smaller portion of the total portfolio compared to ITB. Additionally, XHB's sector allocation is broader, covering not only homebuilders but also companies in related sectors such as home improvement, building materials, and home furnishings. Therefore, XHB's top 10 holdings often include a mix of homebuilders and companies that are involved in various aspects of the housing market, including retailers like Home Depot or Lowe's, which are more related to home improvement than to actual home construction. In contrast, ITB tracks the Dow Jones U.S. Select Home Construction Index, which is a market cap-weighted index. In this type of index, larger companies have a more significant impact on the ETF's overall performance, leading to higher concentration in the top holdings. As a result, ITB's top 10 holdings typically constitute a larger percentage of the total portfolio, often representing a substantial portion of the ETF's assets. ITB's focus is narrower, primarily targeting companies directly involved in home construction. Therefore, the top 10 holdings in ITB are more likely to be dominated by large, well-known homebuilders like D.R. Horton, Lennar, or Pulte Group. While ITB may include a few companies in related industries, the emphasis remains on companies whose primary business is home construction, leading to a more concentrated exposure to the homebuilding sector specifically. In summary, the top 10 holdings of XHB are more evenly distributed and reflect a broader sector allocation, encompassing a mix of homebuilders and companies involved in related housing market activities. Conversely, ITB's top 10 holdings are more concentrated and are primarily focused on large homebuilders, resulting in a more targeted exposure to the home construction sector. Between XHB and ITB, which ETF has shown greater historical volatility, and what might that indicate about their respective risk profiles? Between the SPDR S&P Homebuilders ETF, XHB, and the iShares US Home Construction ETF, ITB, ITB has generally shown greater historical volatility. This difference in volatility is significant and reflects the underlying structure and focus of the two ETFs, which in turn influences their respective risk profiles. ITB tracks the Dow Jones US Select Home Construction Index, which is market cap weighted and heavily concentrated in large homebuilders. Because ITB's index focuses primarily on companies directly involved in home construction, it is more sensitive to factors that specifically affect the homebuilding industry. These factors include changes in interest rates, housing demand, construction costs, and broader economic conditions that impact the housing market. The concentration of ITB's holdings in a relatively small number of large homebuilders means that the performance of these companies can have a significant impact on the ETF's overall performance. As a result, ITB tends to exhibit higher volatility, as the homebuilding sector itself is subject to significant fluctuations based on economic cycles, shifts in consumer confidence, and changes in government policies related to housing. This higher volatility indicates that ITB is likely to have a higher risk profile, making it more suitable for investors who are specifically looking for targeted exposure to the home construction sector and are willing to accept the associated risks. On the other hand, XHB tracks the S&P Homebuilders Select Industry Index, which is an equal-weighted index. This approach results in a more diversified portfolio where smaller companies and those in related industries such as home improvement, building materials, and home furnishings have a meaningful impact. The broader scope of XHB's index, which includes companies beyond just homebuilders, tends to reduce its overall volatility. The inclusion of companies involved in various aspects of the housing market that are not directly tied to home construction provides some insulation against the sharp fluctuations that can occur in the homebuilding sector. Consequently, XHB has historically shown lower volatility compared to ITB. This lower volatility suggests that XHB has a more moderate risk profile, making it a potentially better choice for investors who seek exposure to the housing market with a diversified approach that spreads risk across different segments of the industry. In summary, ITB has shown greater historical volatility compared to XHB, primarily due to its concentrated exposure to the homebuilding sector and the market cap weighting of its index. This higher volatility indicates a higher risk profile, making ITB more suitable for investors looking for focused exposure to homebuilders. In contrast, XHB's broader and more diversified exposure results in lower volatility and a more moderate risk profile, appealing to investors who want a balanced investment in the housing market that includes both homebuilders and related industries. Which ETF, XHB or ITB, has higher assets under management, AUM, and how does that reflect on its liquidity and investor confidence? The iShares US Home Construction ETF, ITB, typically has higher assets under management, AUM, compared to the SPDR S&P Homebuilders ETF, XHB. This difference in AUM can have important implications for the liquidity of the ETFs and investor confidence. A higher AUM generally indicates that more investors have committed capital to the ETF, which often reflects greater investor confidence in the fund's investment strategy and its underlying index. In the case of ITB, the higher AUM suggests that investors have more confidence in its focused approach to the home construction sector. ITB's underlying index, the Dow Jones US Select Home Construction Index, is market cap weighted and heavily tilted toward large, well-known homebuilders. This targeted exposure can appeal to investors who are specifically interested in the performance of the home construction industry, particularly during periods when this sector is expected to outperform the broader market. The higher AUM also suggests that ITB may be more attractive to institutional investors, who often prefer funds with greater assets under management due to the perceived stability and lower tracking error that typically accompany larger funds. In terms of liquidity, a higher AUM generally enhances an ETF's liquidity. Liquidity refers to how easily an ETF can be bought or sold in the market without significantly affecting its price. ETFs with higher AUM usually have higher trading volumes, which means that they can be more easily traded at prices close to their net asset value, NAV. For ITB, the higher AUM likely translates into tighter bid-ask spreads and more efficient trading, making it easier for investors to enter and exit positions with minimal market impact. This liquidity is crucial for both individual and institutional investors who value the ability to trade large amounts of shares quickly and at predictable prices. XHB, while still popular and widely traded, generally has a lower AUM compared to ITB. This could indicate a more niche or diversified investor base, as XHB's equal-weighted index includes a broader range of companies beyond just homebuilders, such as those involved in home improvement and related sectors. While XHB's AUM is substantial enough to ensure good liquidity, it may not match the liquidity levels seen in ITB. However, XHB's diversified exposure can attract investors who prefer a less concentrated risk in their investments and seek a more balanced approach to the housing market. In summary, ITB has higher assets under management compared to XHB, reflecting greater investor confidence in its focused exposure to the home construction sector. This higher AUM contributes to better liquidity for ITB, making it more attractive to investors who prioritize ease of trading and are comfortable with its more concentrated risk profile. XHB, with its lower AUM, still provides good liquidity but caters to investors who prefer a diversified approach that includes not only homebuilders but also companies in related sectors. How do the sector weightings in XHB differ from those in ITB, particularly in their exposure to homebuilders versus home improvement companies? The sector weightings in the SPDR S&P Homebuilders ETF, XHB, differ significantly from those in the iShares U.S. Home Construction ETF, ITB, particularly in their exposure to homebuilders versus home improvement companies. These differences arise from the distinct indices each ETF tracks and their methodologies, which in turn influence the composition of each fund's portfolio. XHB tracks the S&P Homebuilders Select Industry Index, an equal-weighted index that provides broad exposure to the housing market. Because of its equal weighting methodology, XHB's sector weightings are more diversified. This index includes not only homebuilders, but also companies in related sectors such as home improvement, building materials, and home furnishings. As a result, XHB's portfolio typically has a more balanced mix between homebuilders and companies that support or benefit from the housing market more broadly. For instance, XHB often includes significant holdings in companies like Home Depot, Lowe's, and other firms that are primarily engaged in the home improvement sector. This broader sector exposure means that XHB investors gain exposure to the entire housing value chain, from the construction of new homes to the renovation and furnishing of existing homes. In contrast, ITB tracks the Dow Jones U.S. Select Home Construction Index, which is a market cap-weighted index focused primarily on companies whose main business is home construction. As a result, ITB has a much higher concentration of its assets in homebuilders compared to XHB. The majority of ITB's holdings are large, well-known homebuilders like D.R. Horton, Lennar, and Pulte Group, which dominate the fund's sector allocation. While ITB may include a few companies involved in building materials or home improvement, the exposure to these sectors is much smaller compared to XHB. This narrow focus on homebuilders means that ITB is more directly tied to the fortunes of the home construction industry, and its performance is more sensitive to factors that specifically impact this sector, such as changes in housing demand, interest rates, and construction costs. In summary, XHB has a more diversified sector weighting, with significant exposure to both homebuilders and home improvement companies, reflecting its broader approach to the housing market. ITB, on the other hand, has a much higher concentration in homebuilders, with limited exposure to home improvement companies, focusing more narrowly on the construction side of the housing market. This distinction leads to different risk and return profiles, with XHB offering a more balanced exposure across the housing industry, while ITB provides more concentrated exposure to the homebuilding sector specifically. In terms of geographical diversification, does XHB or ITB provide a more concentrated exposure to the U.S. market, and how does that affect their performance? Both the SPDR S&P Homebuilders ETF, XHB, and the iShares U.S. Home Construction ETF, ITB, provide concentrated exposure to the U.S. market, as they are both designed to focus specifically on the U.S. housing sector. However, the nature of their concentration and how it affects their performance differs due to the composition of their underlying indices. XHB tracks the S&P Homebuilders Select Industry Index, which includes a broader range of companies within the U.S. housing market. This index is equal-weighted and encompasses not only homebuilders, but also companies in related sectors such as home improvement, building materials, and furnishings. While all of these companies are based in the United States, XHB's broader inclusion of companies that support the housing industry in various ways means that its exposure, though still concentrated in the U.S., is more diversified across different aspects of the housing market. This broader diversification within the U.S. market can help mitigate some of the risks associated with the housing industry's cyclical nature, as the performance of home improvement and building materials companies may not be as closely tied to new home construction as the homebuilders themselves. This diversified approach can potentially lead to more stable performance, especially in times when new home construction is sluggish, but home improvement and renovation activity remain strong. In contrast, ITB tracks the Dow Jones U.S. Select Home Construction Index, which is more narrowly focused on companies directly involved in home construction. This index is market cap weighted, meaning that a few large homebuilders dominate the portfolio. Because ITB is heavily concentrated in the home construction segment of the U.S. market, its performance is more directly tied to the health of the U.S. housing market, particularly the new home construction industry. This concentrated exposure can result in higher volatility, as ITB is more sensitive to factors that specifically affect homebuilders, such as changes in interest rates, housing demand, and economic cycles. For instance, during periods of economic expansion when housing demand is high, ITB may outperform due to its concentrated exposure to homebuilders. Conversely, during downturns in the housing market, ITB's performance may suffer more than XHB's due to its narrower focus. In summary, while both XHB and ITB are concentrated in the U.S. market, ITB provides a more concentrated exposure specifically to the home construction segment, leading to potentially higher volatility and performance that is more closely aligned with the cyclical nature of the housing market. XHB, with its broader exposure within the U.S. housing market, offers more diversification across related sectors, which can lead to more stable performance over time, particularly when different parts of the housing industry perform differently. Which ETF, XHB or ITB, has performed better during periods of rising interest rates, and what might explain this difference? During periods of rising interest rates, the performance of the SPDR S&P Homebuilders ETF, XHB, and the iShares U.S. Home Construction ETF, ITB, can differ significantly due to their underlying index compositions and the sectors they emphasize. Typically, ITB has tended to perform worse than XHB during periods of rising interest rates. The primary reason for this difference lies in the focus of the indices that each ETF tracks. ITB tracks the Dow Jones U.S. Select Home Construction Index, which is a market cap-weighted index concentrating on large homebuilders. These companies are directly affected by changes in interest rates, because higher rates generally lead to increased borrowing costs for homebuyers. When interest rates rise, mortgage rates typically increase, which can reduce housing affordability and slow down new home sales. As a result, homebuilders face decreased demand for new homes, leading to lower revenues and potentially reduced profits. This direct impact on the homebuilding sector often translates to weaker performance for ITB in a rising interest rate environment. On the other hand, XHB tracks the S&P Homebuilders Select Industry Index, which includes a broader range of companies within the housing market. This index is equal-weighted and includes not only homebuilders, but also companies involved in home improvement, building materials, and related sectors. While rising interest rates can still affect the housing market, XHB's broader exposure means that it is not as heavily reliant on new home sales as ITB. For instance, companies involved in home improvement or building materials might experience less direct impact from rising mortgage rates since their revenues are less tied to new home purchases and more tied to renovations and repairs. As a result, XHB's diversified exposure can help cushion the overall impact of rising interest rates on its performance. In summary, ITB generally performs worse than XHB during periods of rising interest rates due to its concentrated focus on large homebuilders who are more directly affected by increased borrowing costs and reduced housing demand. XHB, with its broader and more diversified exposure to various aspects of the housing market, including home improvement and building materials, tends to show better resilience and comparatively better performance in such environments. This diversified approach helps mitigate the negative effects of rising interest rates on the overall performance of XHB.